3M Corporation, ticker MMM, is currently trading at $103.69, but for the past 5 years, the stock has experienced a large fall in its price, falling down from $215 all the way down to $103.69, which is the lowest since 2013. Now, one of the main reasons for this dramatic sell-off is the numerous legal suits being filed against MMM, prompting investors to sell their shares, fearing the worst. But if we have a closer look at the business, we can see that through all this legal trouble, 3M is hardly falling apart. And therefore, in this video, we'll have a look at my stock valuation spreadsheets, where we will analyze 3M and find its intrinsic value using the 9-pillar analysis, Graham's formula revised, discounting cash flow model, multiples valuation model, and the dividend discount model. And all these models will lead to our ultimate value at the end of the video. Now if we jump back to the stock screener, we can just plug in the ticker of MMM and all the metrics will show up automatically. Now right away we can see that the current dividend yield of 3M Corporation is sitting at 5.84%, which is a very good starting dividend yield. The dividend payout is $6 per share per year, and the payout ratio is slightly below 60%. Not great, but not bad either. We can see that the institutional ownership of this company is sitting just below 70%, and the beta of this company is sitting at 0.95, which means you won't see that much volatility with this company. The analysts currently project the price of $122.14, which is quite higher than the current trading price. As we can see, the income of MMM has decreased quite a bit since 2022, and the cash flow has been decreasing as well. But now let's jump to the 9-pillar analysis. We'll plug in the ticker MMM, and right away we can see that the company is doing fairly well. The 5-year PE ratio and the price to free cash flow are both sitting fairly low. The 5-year PE ratio and the price to free cash flow are both sitting fairly low, and there has been revenue and net income growth over the past 5 years, which is great. The long-term liabilities over the 5-year free cash flow should be below 3. In this case, it's sitting at 0.81, which means that 3M can pay off their long-term liabilities with their 4-year historical free cash flow. We can also see that the consecutive dividend growth has been sitting at about 5% annually over the past 5 years, and there has been decreasing shares outstanding year to date. Now, the one thing that I find very concerning with 3M Corporation is the non-increasing free cash flow, and if we scroll down to the financials, we can see that the free cash flow has not been increasing at all over the past 8 or so years, sitting at a lower value than it has been in 2014. But let's jump to the next valuation model, which is the Graham's valuation model. Here we take the earnings per share of 3M Corporation and multiply that by the average yield on AA Corporation bonds, which we multiply with the sum of base PE and the multiple of the 5-year earning growth estimate and the growth rate multiplier. And all of this we divide by the current yield on AA Corporation bonds to get an intrinsic value of $107.53, currently 3% higher than the current trading price. Now from this valuation we can see that even though the shares of 3M Corporation have been decreasing in price, 3M has a great earnings per share. But now let's jump to the discounted cash flow model. Here we will plug in the ticker MMM and wait for the metrics to show up. The program automatically plugs in the free cash flow over the past 10 years and calculates the average growth rate. I calculated a growth rate of about 4% over the next 10 years, and using this growth rate I calculated the future free cash flow over the next 10 years. Now to move on in this valuation, we need to calculate the present value of that future free cash flow, which we'll do using the discount rate, which I calculated to be at about 9%. Using the discount rate, we calculate the present value of the future free cash flow over the next 10 years, sum up that future free cash flow, add any cash and cash equivalents, subtract total debt, and get an equity value of $63 billion. Which we will divide by the shares outstanding and get an intrinsic value of $114.83, about $10 higher than the current trading price. Now we can jump to our next valuation model, which is the multiples valuation model. Here I will be comparing 3M Corporation to PINC, HTHIY, and TT. And as you can see, the average PE ratio for these companies sitting at 20.46. To get the average PE ratio, which we use to get our intrinsic value, I take these companies' stock prices, divide by their earnings per share, and get their individual PE ratios. I then take the average P ratio and multiply by the earnings per share of 3M Corporation to get an intrinsic value of $208.26, almost double the current trading price. And this just shows how undervalued 3M Corporation is compared to companies operating in the same sector and with similar structures. But now let's move to our final valuation model, the dividend discount model. Here I plugged in the dividend payout for the past 5 years and calculate the average growth rate to be at 2.33%. Now, as I do believe that for the next few years the dividend growth rate will be stunned slightly, I project a growth rate of 1.7%, and this will give us an intrinsic value of $147.88. And now we can move to our output tab where we average out the intrinsic values we got from the 4 different valuation models to arrive at an ultimate intrinsic value of $144.62. Now, as a value investor, as you can see, I applied a margin of safety of 20%, and that will still get me an acceptable buy price of $115.68. But now let's say we want to remove the multiples valuation as it is a clear outlier. So we will delete the cell H15 and we will get an intrinsic value of $123.40. Now let's say we want to apply a safety margin of 10%, which would give us an acceptable buy price of $111.06. I personally do believe that 3M Corporation is worth more than what it is currently trading at, and that is why a few weeks ago I added this company to my portfolio. Now, if you enjoyed the video, make sure to leave a like and consider subscribing if you want to see more valuations like this.